Welcome to the IJ Interview, Infrastructure Journal's video podcast series with innovators and leaders in the world of funding and financing global infrastructure. Today I am joined by Peter Hofbauer, the head of infrastructure at Hermes GPE, one of the leading independent investors in global private markets. Peter is responsible for all relationships with managers active in the infrastructure sector and for coordinating the analysis, due diligence, and monitoring of Hermes infrastructure investments. Peter, welcome to the podcast.
Thanks, John.
Let's get right to the issue. You work with pension funds and invest on their behalf. What is holding them back, and how can the market structure itself differently to be more attractive to investors?
Well, I think pension funds are actively looking at investing. They are doing that for a couple of different reasons. There are clients of ours certainly that are looking for liability matching characteristics from infrastructure investments, so long duration, inflation protection, low correlation to other asset classes. And there are others that are looking for more alpha. So I think it is happening, but certainly our clients do a very researched and thorough process in deciding when to allocate capital to a sector. And one of the challenges with infrastructure is it's still a fairly immature sector overall, and so there's not a lot of empirical data there that can make that selection process accelerated beyond the process they're already going through. I think the other challenge too is in fact that the different access options for institutions aren't always that clear or ideal for the type of investment characteristics that they're seeking to get from infrastructure. There's been a lot of private equity type structures which have really been applied, almost retrofitted to the infrastructure marketplace. And in fact, for the liability matching investors, that's not really the best aligned structure.
Next question, is construction risk the difficult issue that people make it out to be?
Well, I think construction risk sometimes gets bundled up together with sort of greenfield project risk. I think construction risk in its purest form is something that the market can analyse properly and can understand, and there are risks that can be allocated and mitigated and in a form that's acceptable to long-term investors. The challenge, of course, is greenfield projects, which not only at times incorporate construction risk, but they also include development risk and demand risk or some form of market risk. And both of those type of risks are ones that institutional investors are not really that comfortable with, and in fact historically have been the ones where most challenges have been faced in terms of returns actually meeting expectations. There's timing issues with development, which can be a long process and also doesn't actually involve a lot of capital. It's very resource intensive in terms of people. So again, it's not really ideally suited for institutional investors that are looking to deploy capital, particularly institutional investors that are looking to deploy capital in infrastructure assets which are low risk, low volatility, high certainty of returns.
Is the UK pensions infrastructure platform helping or hurting the market at this stage? Do you think that some pension funds are waiting on the sideline to see how this develops instead of making investments now?
Well, John, I think that's a really good question. I think the Pension Infrastructure Platform, or PIP, has done some really good things. It's increased everyone's awareness about infrastructure as a potential investment option for institutional investors. And it has also, I guess, helped embed in people's mind the logic of aggregating capital. One of the challenges with infrastructure investment is it does require very large pools of capital to be aggregated. I think the challenges for the PIP include the need to get clarity around strategy. They need to assemble a team and or managers that have a proven track record, and they need to get a seed portfolio together. And so I think there are other options that are available, such as where at Hermes, we run a shared platform which aggregates capital and has some of those other things that institutional investors can today form a view on. I think we're now at a point where a lot of institutional investors are getting sufficient clarity around PIP and are in a position now to decide whether it's something that works for them or something that doesn't. And we're personally, as an institution, seeing more decision making occurring around whether people pursue the PIP or not.
Will pension funds consider assets outside core brownfield sectors like utilities and PFI? Would they be willing to invest in newer markets such as renewables and in particular offshore wind?
Well, we encourage our clients to think about the investment characteristics that they're seeking from infrastructure investment. It's not a homogeneous asset class, and it can cover a very broad range of risks and returns. We categorise our strategies. We run 3 strategies, if you like. One is core, which is very much a risk, low volatility strategy, almost a fixed income substitute with a very high inflation correlation. Value add is another strategy that we run that has slightly more risk and volatility, maybe some GDP exposure, but again, probably what most of the market calls core or core plus. And then we have opportunistic. And opportunistic is something which is almost like private equity, with a slightly lower risk profile. The importance of this is that people should look at the outcome, not the input, which is the sector. Now, across all of those sectors, depending on where you invest in the capital structure, the maturity of the project, the nature of the arrangements, across a whole range of things, can influence the outcome. So it should be output-based, and if it's structured properly, a lot of those sectors should be attractive to investors over time.
Finally, you were previously the global head of infrastructure at Babcock Brown when it was a mighty force in this market. What did you learn from that experience, and how did the global financial crisis impact infrastructure? And what cautions, if any, do you have for investors?
Well, Babcock Brown was a very early entrant into the infrastructure space. It was a full-service firm, so it undertook development, provided financial advice, also provided investment management and asset management services. And it was a business that, having recently floated, was looking to grow quite rapidly and was structured in a way which was suited for the market at the time. And the market at the time had an abundance of capital and a shortage of people and a shortage of investment opportunities. And so Babcock Brown, along with a lot of other people in the market, I might add, was very much focused and aligned towards origination. As it transpired with the global financial crisis, we had a complete U-turn in market conditions. We had a scarcity of capital, and we had an abundance of people and an abundance of investment opportunities. And the alignment was wrong. It was wrong because it was focused on origination and focused on what, in fact, a lot of clients were seeking at that time was access to investment opportunities. And coupled with that, like many other participants in the market, the GP, if you like, the listed company, had leveraged. And a combination of the misalignment and the leverage, which was above what was sustainable, plus the fact that it was a full-service business with conflicts associated with providing multiple services, were some of the challenges that Babcock Brown focused. So I think the lessons that certainly I've learnt and applied very, very closely in terms of establishing new business activities at Hermes is to avoid the conflicts. We've got a very, very clean structure in terms of conflicts, and we're very, very focused on that. Avoid the leverage and get the alignment right, most importantly. And so we're very aligned to our long-term investment clients, and our outcomes as an investment team are geared solely to that.
Peter, thank you very much for taking the time to be with us today.
Thanks very much for having me in today.
And to our viewers, thank you very much for watching. And keep an eye out for further IGA video podcasts with more leaders in the world of financing infrastructure in the months ahead.